Okay, let's quickly get started. Let's review a sample trade from one of the backset trade traders and analyze its performance. And see what its flaws and mistakes were. Go ahead and hit subscribe, then come back and watch the rest of the video with me. Okay, in the first trade they entered a short position right here. Now, I'm not sure if they actually placed the stop loss here or behind the level. The correct thing to do is to place the stop loss behind this level, okay? And they entered a short position. Here, it would have been better if they had waited for another proper reversal signal before entering the trade. They did make a full exit at the right time though. They knew how to manage the position strategy. But if they had let the sharpness of this leg fade and then make a correction like this, if it showed a weakness in the new leg here, and then they entered, it would be much better and cleaner. Because with reversals, we've said that we always need to see an inability to continue. In their next trade, the same thing happened again here. So we've realized that the main flaw of this trader so far is that they tend to enter positions that go against sharp, sudden moves. If they had instead waited here for a weaker correction, a less aggressive leg with a more shallow slope to form at this level, and then entered the position, it would have been much more logical. But if we don't wait for that, what happens is a powerful candle forms, breaking the bottom of the range they've marked. And as we can see, the bearish legs are also very powerful. And if they wait for that weak leg, the trade will work out much better. Let me put this on silent. Okay, for the next trade they had a very precise and correct entry, but it would have been better if they had entered here with a slightly smaller volume, as that could have been a more cautious approach. I don't know if they went in with their full size or with a smaller portion of their volume. Why is it better not to go in with full size? Because the correction isn't that significant. Even though it was at a level, it needed to mature more, meaning it should have given us 1 or 2 more candles of correction. Then we could have entered with a larger size. It's a bit high risk, otherwise the setup is clean. The bearish legs were followed perfectly and precisely, and they identified the confirmation candle here very correctly. And it gave them such a great result. But as I said, because it wasn't a more mature correction, we enter with a smaller size. You can't just say because this trade made this much profit, that we should base our rules on it and say this amount of correction is enough. No. Be careful, if the market gives you 1 or 2 good profitable trades, you shouldn't base your entire system on the behavior you saw there. The rules are the same. Now sometimes you can act with a higher risk and take these trades. Sometimes you can act with low risk and take very clean positions, but this one, in its own right, was clean and good. Its only flaw was this correction it had here. Okay, for the next trade, they had a very good entry here, and its correction was also good. So, what was the reason for taking profit here? The momentum of the previous downward leg has been filled, and our entire expectation from this position is the size of the previous leg's momentum. They entered here, the momentum was filled, and they exited 80%. Now that it has come up a little higher, by trailing the stop loss, their stop loss was hit in profit at this point. They acted excellently and correctly. Once the momentum is filled, you can take 60%, 70%, or 80% profit. You trail the rest with a stop, moving the stop behind the price. Just like in the live trades I've posted for you, and you can catch the rest of the market's drop in that way. The next trade. Okay, here again, the entry was with a small correction, and if they had waited to enter during a fuller, more mature correction, it would have been better. But since this candle has a good overlap with the previous one, and the entry trigger has fallen below the shadow of that previous candle, the entry trigger has fallen exactly below it, and it has a good overlap. The sellers of this candle relative to its previous buyers. This again brings the risk of the trade way down. When you see an overlap like this on a candle, with an entry trigger that's after the shadow of that candle, the risk of the trade is at rock bottom, okay? Stop loss above, and they entered the position. But here, where they did a full exit, they could have, for example, closed 80% and placed the stop loss here to make it risk-free. That's the thing we always do. For example here, take 60, 70, or 80% profit. The rest is a trailing stop to the point of the full drop. Okay, they had another trade. Here they made a purchase after this candle. They considered this leg a correction. Either they saw it as a correction or they thought it gave a reversal on this level. Guys, we can't take a reversal on this level. Why? Because this isn't our lower framework. We don't have a lower framework here. I fully explained how to identify the lower framework when you don't have one in the movement section. Since we don't have a framework here, we can't look at it as a reversal. So that's that. We can't look at it as a correction either. Look, if we consider this leg as the extension and the main leg, this cannot be its correction. Why? Because it has come down more than 50% and has done so in a completely long grinding manner. If a correction becomes this grinding, we call it a what? A complex correction. On the other hand, it has also passed 50%. And when the price passes 50% of the leg, we've said we don't consider it a correction at all. And in this downward trend we had, this itself is considered a downward leg, of which this is its correction. And again, it gave a candle, came over here, and continued the drop. Now, those who were sellers entered here and got into the market. They had the wrong perspective on the market, but that's okay. It happens. It's completely normal, and the reason this position got stopped out. So that's what it was. Let's look at the last position. The last position is excellent. I can say it's the cleanest setup the cleanest setup we've seen together in this journal. A clean extension, a sufficient and mature correction, a proper confirmation candle, an entry trigger, and the stop loss is in the right place. The Z has also been reduced. The thrust was also excellent. We had an increase. All the criteria are met. All the boxes are ticked. The cleanest entry and the cleanest result that could be achieved. And here they made a full exit, which is also excellent. You see, if all these points are followed, it gives you a nice, clean, stress-free entry. The main point of our work is to enter the market without stress, to know why we are entering. If we want to go in based on ignorance and luck, it comes with stress, and even if you make money from it, even if it's a profit, it's not worth it. That's it for this video. I hope you've taken away some useful points. Until the next video, I commend you to God the Great.